So that was a
Yeah.
challenge in early 2021, making sure we had other people to take over those accounts. I jumped in myself.
Sure.
2021, COVID was, I guess the vaccines were coming in. So once it became April of 2021, we haven't traveled for a year. So I decided
Correct.
I had to go on the road. So I feel proudest of that. Like all these people,
Yes. Yeah.
they grew with the company. Some of them left. So another person, spent 4 years with us and left, but now he's got a fantastic position as a manager at Ernst & Young. Other people have set up their own companies. That's fine. And
Yes.
part of it is maybe it's not just risk taking, it's maybe just sheer stupidity and ignorance. You don't
Uh-huh.
understand the risk, so you just take it. Yeah, so I think you have to look at your option. It's as simple as that.
Yeah.
And there's probably a couple of roles that are absolutely critical. The first
Sure.
role is where is the customers coming from?
This is the Business Philosopher with a New podcast. I'm your host, Bhavesh Naik. One of the themes we explore on this podcast is building a thriving business with a successful exit. On that note, I have a very special guest for you today. Sunil Soares is the founder and CEO of YDC, the industry's first AI economics platform. Prior to this role, Sunil was the founder and CEO of Information Asset, a data management solutions firm, which he sold to private equity. He is the author of 10 books. You heard that right. 10 books on data management. He has worked as an auditor at PwC and as a management consultant at Booz & Company. Sunil is a member of the Institute of Chartered Accountants of India and has an MBA in finance from the University of Chicago Booth School of Business. I am pleased to have you on this podcast, Sunil.
Thank you, Bhavesh. Appreciate it. Thanks for your kind words.
You've had a successful career. Even before you started your business, you had quite a career working for PwC and Booz. So what was the inspiration that got you into starting your own business with Information Asset, your first company?
Yeah, so, in terms of my background, I'm classically trained as an accountant, the Indian equivalent of a CPA. It's a chartered accountant from India.
Sure.
I had a varied background. I worked as a loan officer in a bank in the Middle East. I worked in management consulting for Booz Allen. I was an accountant at PwC. And then I spent, almost 14 years at IBM in a variety of
Sure.
technology roles, marketing, pre-sales. And then my last role was around data governance pre-sales. And I
Sure.
led the software practice around data governance at IBM. And I wrote a book. It was called the
Sure.
IBM Data Governance Unified Process. And it brought together all the different IBM products in a cohesive manner that
Sure.
help our sales organization explain the value proposition to clients. So as we engaged with more and more clients, this was circa 2010, 2011, I felt it was, probably something I could just launch on my own and see how it would work. That's it. I didn't expect anything more than that. My wife said, go off, do it for a year.
Uh-huh.
This is IBM salary. Can you make it up in a year? If not, maybe that's the end of the experiment and you go back to corporate America, whether it's IBM or somebody else. And I made up my IBM salary in a year, not in the first 6 months,
Yeah.
but over the course of a year. And then I just, went on from that. Right?
Sure. I have to tell you, your wife is a wise woman.
Yeah.
So, because she gave you that deadline, and that she gave you that deadline to shoot for. I'm a deadline guy, and if someone gives me a deadline, I'm going to work harder, and I'm going to work with a greater focus. You said you didn't really have an idea of what it would be like. I would say that even perhaps subconsciously, you probably had some kind of an idea of what your business would be like. Did you have any kind of a vision? Not that you going back and thinking about it.
No, I just took my IBM salary.
Uh-huh.
I said, okay, what do you think will the bill rate be? I had never run a services firm. I
Sure.
was in IBM software group, so I was not billable. I was doing pre-sales. So I'd never done, services. I actually never even written a statement of work, to be honest. So never
Okay.
written a
Oh,
statement of
wow.
work. I was kind of clueless. I didn't know what I didn't know.
Right.
All I knew was I was an accountant. So I said, okay, take the IBM salary, take a bill rate. There's 2,000 hours in the year, maybe 80 hours for vacation. And then what's the time on the bench? And then I just came up with how many hours, I needed to be billable
Sure.
percentage.
Sure.
I started with that. I said, okay, I'm just going to be an individual contributor, and that's it. And I was an individual contributor for the better part of a year before I hired my first employee. Right. So
Okay.
that was it.
Sure.
I got my first client. It was actually an IBM client, and IBM was fine with it. Got my first client when I just left IBM. That was a 7-week project that I
Mm-hmm.
did. I was so
Right.
excited with myself. And then that was 2012. So this was July 2012
Sure.
till around August 2012, 8 weeks.
You're right.
And then I had no clients after that for 4 months. No clients. So I was, figuring out how to work the phones, send out emails, reach out to some IBM contacts that I had. And
Sure.
it's really funny. Someone told me when you go from being in corporate America to being a vendor,
Yeah.
right? When you're a vendor, when you run a company, you become a vendor, right? It's funny how your friends don't return your
Oh,
calls,
yes.
how you got to be used to people,
Been there. Yeah.
ghosting you, but you
Yeah.
can't take it personally, right? It's just
No,
how it
no,
is.
you can't.
The
Right.
other side,
Sure.
and you just got to accept it. And at that time, it was a bit tough.
Yeah.
But then, sometime around November of 2012, I started getting a few calls and a few more and a few referrals, and then things picked up.
Sure. Was it all cold calls at that point? Just person
I
reaching
would
out?
say so. That's interesting. So when I first left, my first client was through my relationship in IBM. Then my second client was actually through another relationship
Mm-hmm.
with IBM. He just happened to get a new role as a data governance lead for a large financial services company. So he called me out of the blue. I remember it was Hurricane Sandy. I
Uh-huh.
was living in New Jersey. It was
I remember
Hurricane
that.
Sandy. There was
Yes.
storm everywhere. And he called me from California and said, "Oh, I got this new job. You got to come and do a data governance maturity assessment for us." So that's fine. So I went and did that. And then the third and the fourth were based on referrals from the IBM sales team. And pretty much that's how it went. I did some cold calling, but over the course of my career, I found that we've not been when I hired salespeople I wasn't very successful with cold calling.
Right.
It was mostly around a network
Yeah.
that we built
Sure.
and about referrals. So we
Right.
would have partners we worked with, and those partners would refer clients to us.
Absolutely. What was your offering? What was your service at that point? You said data management maturity assessment. Was that the core of your product at the time, or
Always.
did it
So
evolve?
my first book, my second book, all the way till book number 8, was all around some version of data governance. And think of data governance as ultimately making sure the business owns the data. So then
Sure.
there's disciplines around data quality, improving the quality of the data, metadata, making sure it's properly documented, making sure the lineage of the data, knowing where it comes from.
Sure.
And that was it. And those were the early days of data governance, but increasingly the regulators got involved. So if you go to banking, there's a regulation called BCBS 239.
Sure.
And from a capital adequacy perspective, a lot of the regulators say, okay, tell banks, you need to set aside so much capital
Sure.
to make sure that if things go badly, you have enough capital to withstand shocks. Great.
Sure. Sure.
But when banks show those capital adequacy reports to the feds have to trust the data. So
Sure.
that's where data governance comes in, right? So that
Right.
was one big driver. The second big driver was data privacy. So with
Okay.
the European Union GDPR, General Data Protection Regulation, as well as the California CCPA, and frankly, everywhere now, there's a lot of privacy regulations. And even these days, with artificial intelligence, there's a
Yeah.
lot of data privacy involved.
Sure.
So though that started a groundswell in terms of data governance from a regulatory perspective.
Got it. I looked up your books, by the way, for our listeners. If you go to Amazon.com and look for Sunil Soares, check his spelling, and you'll find 10 books there. And one of the books, Sunil, that I saw was about sales. So who to approach for selling the data management projects. I think, and I don't quite remember the name of the book, but I think that was the subject matter. So, you obviously have an insight on who to approach and who is the right person to talk to when you talk about data management and data governance. So could you share any insight on who that person is? It could be the title, the function, or the person behind that title and the function, who is the
Yeah.
buyer for
Thank
data.
you, Bob. That was my second book and probably the one I'm proudest of.
Very
Called
interesting. Yes. Yeah.
Selling Information Governance to the Business. So if you're a
Sure. That
salesperson,
one. Yeah.
one of the things you do is you build an account plan. So let's say if you're a salesperson and you're selling to State Farm,
Sure.
you need to know what are all the roles at State Farm or Goldman Sachs, whatever, right?
Sure.
What are the roles? So
Yeah.
what this book did was, from a table of contents perspective,
Sure.
it decomposed across two vectors. It said selling information governance by industry,
Right.
so banking, capital markets, manufacturing, healthcare, etc. Right,
Right.
and then another vector was by function.
Sure.
So how do you sell to marketing, sales, product management, finance,
Right.
risk management, etc. So those are the two vectors. So when you're building an account plan as a salesperson, you got to think, right? Who are the buyer titles?
Sure.
What's the compelling reason for them to buy?
Yeah.
So that's what we did. And then the book had about 30 or 40, I can't remember now, it was 10 years ago, 30 or 40 business cases
Sure.
by industry and function,
Sure.
right?
Absolutely. Yeah. Yeah. That's good information, because this is important. Who to approach and which are the titles and the functions, who will, because this is a technical thing, and I'm assuming that not too many people have an insight on data and data management within the enterprise. And I'm assuming, by the way, your client, an ideal client, is an enterprise. People
Yes.
who deal with big data, right? So one of the things that I like to kind of get into a little bit is, there is, behind the titles and the function, there is a person. And there's this idea in entrepreneurial, entrepreneurial conversations, that when you need to have a customer avatar or client avatar, right? You need to have a kind of profile of the ideal client that you pursue. And initially it starts out more as a conceptual thing, but then you need to get to the person, the flesh and the bone, someone that you can reach across the desk and shake hands with.
Right.
So could you give us some insight on who this person is? What are their, now pain points is an industry term now. What is it that motivates them to look into data management, and having someone from the outside come into their organization to help them manage data?
Right. So obviously, let's make this topical to these days with artificial intelligence.
Sure.
Right.
Yeah.
Ultimately, now there's a feeding frenzy when it comes to AI. Right.
Right.
Everyone wants it. Unlike the old days with data management, they had a chief data officer.
Sure.
So in the old days, the chief data officer, in my case, the data governance leader who reported to the chief data officer.
Right.
Those are generally the two titles we would target. But ultimately,
CDO, Chief Data Officer, and what's the other one?
data governance.
Data Governance Leader. Okay, sure.
Right. VP of Data Governance, Chief Data Governance Officer, those two roles.
Sure.
But ultimately, they weren't buying software or services for themselves.
Sure.
They were buying software or services to address the needs of the business.
Sure.
So if you're the data governance leader, you're the chief data officer at a bank.
Right.
You're buying software and services because you have a regulatory requirement.
Right. Sure. Sure.
That means their end customer is typically the chief risk officer.
Sure.
The head of compliance, and potentially the chief financial officer who has to attest the financial statements for the regulator.
Sure. Right.
That would be the end goal. Now, come fast forward to today when there's this feeding frenzy around AI. Ultimately, the board is asking every chief data officer, what's our AI strategy? They ask. So the CEO, C-suite is asking the same question.
Sure.
Every business unit is coming up with an AI strategy.
Sure.
So companies are appointing chief AI officers sometimes. There's a lot of chiefs, right?
Yeah.
Chief AI officer, chief data officer,
Sure.
chief data analytics officer, a chief responsible artificial intelligence officer, chief, CRAIO, I guess.
Sure.
But ultimately, they're all working on a set of use cases
Yeah.
that have to help the business.
Sure.
So if you think about it that way and you say, okay, I'm selling a product or a service to the chief data officer, and you may not even, in many cases, many companies may not necessarily go to the CDO. They might go to shadow IT.
Sure.
So they go to another group, right?
Yeah.
And budget. So for example, in AI, the number one use case, according to Sam Altman, the CEO of OpenAI,
Sure.
is software development automation.
Wow.
Number one use case, which is I'm using ChatGPT to generate Python code or Rust code or C Sharp, right?
Sure.
Or I'm using GitHub Copilot. Absolutely, hands down, number one use case.
Wow.
It could also be around documenting large code bases where there's
Sure.
not a lot of documentation, COBOL, documenting COBOL, where some of the developers are old and they've retired, right? So it's a challenge. Because think about it. Every developer, there's lots of developers in the world. Every company's got software developers, whether it's 1 or 10 or 100.
Right.
And they're all looking for efficiencies, not necessarily to fire developers,
Sure.
but make them more productive and get them to do more.
Yeah.
So everybody, and I think from my own experience with my current company, our developers are using ChatGPT to become more productive.
Sure.
It's a pilot. It's going to help you become more productive, right? But now think about it. If you're the chief data officer and you're bringing in this capability,
right,
you're actually looking to make a leader within the CIO, the Chief Information Officer's department, more productive, probably the VP of Application Development.
Sure.
There might be another use case potentially in marketing, where they might be using DALI to create marketing images to become more productive. So there's all those different use cases across the business that you need to understand.
Absolutely. Sure. So you information asset, it grew to about how many number of employees did you have?
70 people, onshore, offshore.
You said 70?
Yeah.
70 people. And you ended up selling this company to a private equity firm, right? So what was that like? What was that? One of the things that we say, there's a Khalil Gibran. I don't know if you read poetry. I don't much, but I kind of dabble into it every now and then.
What is it called?
Khalil Gibran has a poetry. The poet's name is Khalil Gibran, and it goes something like, "Your children are not your children." The name of the poetry is "Your Children." Your children are not your children. They are life's longing for itself. They come through you, but they belong not to you. And goes on and on. But those 4 lines, he's obviously talking about children, but he's saying your children are really not your children. They come from you, but they don't belong to you. You don't own them. And I think it's a great metaphor for the companies that we build. So the question I have for you is, you obviously did many things right to be able to build a company from 1 person to 70 employees, right? So what do you think you did right? And what was it that went into building that company? It's like nurturing a child, right? What are, if you can point out 1 or 2 things that you think that you did right in building a company to this size, what would they be?
I think we focused on our core competency. One thing, it was data governance.
Right. Sure.
Just focus one thing, data governance. That was one. The second thing we did was we focused on building great partnerships with companies who would bring us leads.
Sure.
So as I was growing, there was another company called Colibra, www.collibra.com. And they were a 10-person Belgian startup. Right. Smart guys, right? Doing this great work around data governance technology. So we built a partnership with them. Now, what did I do? This was 2012 when I told you I didn't have any projects and I was This was October 2012. So I reached out to them. I met them at a conference. Stan was the co-founder. I said, "Hey, Stan, I'd like to learn your product." So to start with, it can't be give me leads. That's not a good way to.
Right.
So how can I help you grow your business? Right.
Yeah.
So what I did was I essentially said, I'm going to learn your technology.
Yeah.
And then all that thinking I know about data governance, which is mostly in PowerPoint and Microsoft Word, I'll try to embed it in your technology.
Yeah.
So I had to learn the technology, and they didn't have a lot of good training. So I'd wake up. He was in Belgium, 6 hours ahead of Eastern time. So he said, I can only train you before 10:30 a.m. Belgian time. So I'd wake up at 3:30 in the morning.
Right.
3 times. And he'd do a half an hour session with me. He'd give me access to the software. I'd play with it. I'd create a little demo. I'd put it on LinkedIn. I'd put it on Twitter, tell people what we were doing. So they were getting free publicity. And over time, they started giving us deals. They're a unicorn. We've got 1,000 employees. Right. So it was a great partnership all around.
Excellent. Yeah. So basically, you pointed out 2 things. One is focus, which is so often underrated. Focus on data management. So you chose a market, you chose a technology, you chose your focus, and you basically stayed focused on that one thing. basically, and you became an expert on it. And then creating partnership is not making about us, making about them, help them out, uh, help them build their business, and then them helping you just kind of flew naturally from that.
Yes. Yes.
Excellent. Coming to your second company, so congratulations on the sale of the company, by the way, Information Asset. I think you sold it, what, about 9 months ago, about a year ago?
In July of 2020, so about 8 months ago.
About 8 months ago. Yeah, excellent. So you didn't go back to IBM, you didn't go back to PwC, and you didn't go back to Booz, right? Here you are, you started another company, right? And YDC. So what is the focus of YDC? Is it similar to what you were doing before, or do you have something different?
It's a different focus. So the focus of YDC is around what's the value of your data.
What's the
So
value?
what's the value of your data?
Okay.
So if you think about, when you think about valuation techniques in general,
Yeah.
There's studies that say the market capitalization for the typical S&P 500 company,
Right.
about 80 to 90% of the market cap is intangibles. You can't touch it. So a tangible asset would be a building, it would be machinery, but an intangible asset would be the brand.
Sure.
So think of Coca-Cola's brand.
Yeah.
It will be intellectual property like patents.
Right.
Now, increasingly today, it's about data.
Sure. Oh, yeah. You are
And
right.
also artificial intelligence and all the models you're creating. So if you look at Google, about 95%, if I'm not mistaken, of its market cap is intangible, because it's all about great algorithms they're building, the data they're gathering about you and me, etc. Right?
Right.
Same thing with Tesla. Tesla's got all those full self-driving models and the data they're gathering. So it's saying, okay, if I'm the chief data officer, how do I actually put a value on that data? And more importantly, how do I then lobby for more budget?
Right.
Because let's face it, right? Typical companies, at least in financial services, but most companies, their return on equity,
Right.
typically between 10 and 20%.
10 to 20%, right.
Something like that.
Yeah.
It could be lower. But if you look at the return on your data asset,
Sure.
it's typically in the triple digits, sometimes 4 digits. And people don't necessarily think like that. CFOs don't think like that. Unfortunately, GAAP, generally acceptable accounting principles, don't require you to put data on the balance sheet because it could be manipulated.
Sure.
IFRS, which is the accounting standard in Europe, doesn't as well.
Yeah.
Doesn't require to do that. But just from an investment standpoint, it makes a lot of sense. The market is also starting to recognize this. So a couple of weeks ago, I believe, Reddit is going public. They're doing an IPO.
Yeah.
They just signed
You said Racket, right? Racket.
Reddit.
Yeah.
Reddit.
Yeah.
Reddit.
Sure.
REDDIT. Reddit, the blogging site.
Sure.
Right.
Right.
So Reddit signed a deal with Google,
Right.
where Google Gemini's AI models can get trained using Reddit's data. Return, Google agreed to pay Reddit $60 million a year.
Wow.
So think about the value.
Right.
Now, at the same time, you think about Apple, right? You think about Apple. Apple is a little behind everyone else when it comes to AI.
Sure.
But the market's giving Apple credit. They've got a good multiple, even though their iPhone sales declined in China. The market is giving Apple credit because, for better or for worse, Apple's got all this fantastic data about you and me.
Sure. Sure.
Right? Usage, app store, app usage, etc. So ultimately, the use of data is being used to drive these large language models, foundation models. So that's the thesis behind this stuff.
Sure. And I think I saw the word AI in your offering. It's an economics AI platform or AI economics platform.
AI and data, right? So ultimately, it's around how do you value all your AI models, all your data models, to be able to demonstrate what's the ROI on those assets.
Absolutely. From company A to company B, from information asset to YDC, are there any mistakes you corrected? Was there anything that you said, hey, I hadn't done this right with information asset, and I'm going to get this right with YDC?
Yeah. So the first, I'll step back and I'll say, okay, what are some of the mistakes? If you don't mind,
Sure.
what are some of the mistakes
Go, please.
I made with IT?
Yeah.
What are some of the mistakes I made with information asset first, right?
Yeah.
So I think this is something that happens with all founder companies, which is you focus on growing, and I was involved in selling every project, I was involved in some way with doing every project. I wasn't doing every project 100%, but I
Sure.
was involved. It becomes hard to scale. So sometimes you might have delivery issues and things like that, and then sales you're involved.
Sure.
You can't scale the company.
Sure.
So, I mean, 70 people is not large, but fine.
Right.
But ultimately, so I had a friend from business school
Right.
20 years ago,
Yeah.
ex-Goldman Sachs, and I hired him as a board advisor. And the first thing he told me is focus on your org chart.
On object.
So, org chart, the
Oh, org
organization
chart.
chart.
Right. 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 Sure.
This was circa, we started the company in 2012. This was circa 2018.
Right.
He said, focus on organization chart. So who's responsible for delivery? Oh, I don't have, I mean, I'm responsible for delivery.
Mm-hmm.
Well, can you really be responsible for delivery and client success and selling new projects? No. So then he said, okay, look at who's in your organization. Can you have a chief operating officer?
Sure.
And if all the delivery responsibilities go to them, client escalation. So that's a huge benefit, right? So
Sure.
that's the first thing. The next thing he said, are you on top of your numbers? I'm like, not really,
Mm-hmm.
right? I had an accountant, but she was great, but she was not a CFO.
Sure.
So who's looking at your cash flow analysis? Who's looking at your projections? That was a challenge. So I had an offer to buy the company in 2018. So I got an offer in 2018, and it was a disaster because people wanted to know, those folks very rightly said, where are your revenue projections? I'm like, oh God, I'm just thinking about this current quarter. I'm not thinking about revenue.
Sure.
So then I had a CFO.
Yeah.
Take that away from me. Then the next thing the CFO said is, you need to get your financial statements audited. So
Right.
back in 2018, my board advisor said, if you ever exit, you've got to think about that. Then you need to have someone responsible for HR. Then you need to hire a marketing department who can work with collateral. And you need to have somebody who's running your offshore team. Right? Then you need to have salespeople. So hired salespeople who could, I was still involved to some extent, but they were running blocking and tackling. So we built out that org structure. Right?
Mm-hmm.
For organization. And then I hired ultimately a CEO. I had a CEO in 2021 who took everything over. Everything. So I just went back to being non-executive chairman. So when I sold the company, typically I asked the founder to go with the company. I didn't have to go because the CEO was highly competent, well respected by our clients and our employees. So I was able to step back and focus on the second company, right? So those were mistakes, but ultimately I used some of the learnings.
So you're starting with an org chart, starting with at least an idea of who is going to be the CEO and who is going to be the 4 or 5 division heads reporting to the CEO, and then build it out underneath them, the sales organization and marketing and production.
And you always got to think through, maybe 3, 4, 5 years before an exit.
Sure.
What are the things that a buyer is going to be interested in? So what are the things the buyer is going to be interested in? Right?
Yeah.
So the buyer is interested in audited financials. If you have unaudited, fine, but that increases risk for the buyer, right?
Sure.
They're going to want to see a CFO. They're going to want to see a CEO and solid people, right? So those are the things. And when we went to the diligence process, having all those documents ready, that was a whole 3-4 month process with diligence. So now with the new company, right, you want to make sure, clearly you want to have a clear value proposition that you can explain.
Sure.
But you need to make sure as the business grows, you've got your documentation down pat, right? You've got documentation. So at any point in time, if someone were to call you and say, listen, I want to do diligence, right? You've got everything done, whether you're raising money or you're getting ready to sell or whatever. We aren't, but I'm just saying, you always have to have all your numbers and your documentation ready. Right.
Sure. And I think I assume that when you say documentation, you mean processes and systems and methodologies and things that you do that's like a system, like an operating system for the business.
No. I mean specifically like whenever you go through a sale process or a capital raising process, you'll get 300 questions, minimum 300 questions that you're going to get. And the questions will be run the range from legal.
Right.
Personnel. So legal, they'll want to know, show me all your formation documents.
Sure.
They want to know, for example, show me all your employee contracts. Show me all your
Right.
customer contracts. Are there any
Ah,
lawsuits? Were there any settlements? Have you filed for intellectual property? Do you have
right.
patents? Do you have trademarks? Now, if you think
Right.
about it, if you don't maintain proper records, it's a complete
Yeah.
disaster. They'll want to know, have you filed your taxes?
Right.
Who's your tax accounting firm if you have one? Have you filed
Right.
state filings in different states? Because when they're buying the company, they're taking on risk, right? So
Yeah.
if you're able to showcase that you've got everything laid out, thoroughly, that makes a big difference, right?
Get it. Got it. Yeah. That makes a lot of sense. One of the things that I like to kind of get into a little bit is, entrepreneurship is not always moonlight and roses. There is ups and downs. Sometimes we face some obstacles. And it seems like you had a pretty smooth ride so far. It seems like, but it almost never is like that. This story looks beautiful from the outside, but there's always things that are happening behind the scenes, and that's what makes an entrepreneur, right? So, was there ever once or twice or multiple times anything that was like the dark night of the soul kind of moment where you thought this is too much, I'm done, I'm walking away from it, or something like that?
No, so I don't think I've ever wanted to walk away from it. I had fun,
Okay.
but there were a lot
Yeah.
of stressful moments, like a lot of
Sure.
stressful moments over the course of the years. For example, we had clients right during COVID.
Right.
We had clients cancel
Uh
contracts.
huh.
So
Right.
then we had to basically follow people. And it's hard.
Mm-hmm.
People have families, people have to put food on the table.
Absolutely.
During 2020, I would say 2023 was my best year because I exited.
Sure.
But in a close second is actually 2020,
Yeah.
where I managed to keep the business sustaining
Yeah.
even though there were challenges. So at the start with 2020, we had clients who canceled. So now what are you going to do? So we had to follow some people. Then all of a sudden, some clients said they weren't able to pay, not because they didn't have money, but because the
Sure.
people pressing the button were backed
Right.
up by 6 months. One of our largest clients was backed up for 6 months. They're like, please do the work, but we'll
Right.
pay you later because it takes 6 months to process your invoices. So then I had to go to
Sure.
a bank, make sure we had a line of credit, keep all
Right.
that keep keep all that invisible from the employees
Right.
who were doing the work.
Sure.
And then I had
Right.
my CFO and my CEO, and I would talk every week and go through a
Mm-hmm.
weekly cash flow, who's paying, what's due, what do we need to do, are we going to take this contract if they're going to pay? So that level
Yeah.
of detail. And then the federal government had the stimulus packages, PPP, Paycheck Protection Act. So we use that money. So I think that's where, sort of understanding finances, understanding people,
Right.
making sure we followed some people, then we brought them back. How do we manage all that? That was challenging. And then in early 2021, one of our biggest producers, passed away because of COVID.
I'm sorry to hear that.
Had our
Uh-huh.
biggest course, right? She had our biggest clients, which
Yeah.
was managing both from a sales and delivery perspective. So that was a huge impact. So then
Sure.
we had to, parachute people in. First of all, we had to make sure our family was okay. So we did that,
Sure.
right? While we grieved, we also had to make sure everyone else
Absolutely.
had to
Sure.
stay employed. So that was a
Yeah.
challenge in early 2021, making sure we had other people to take over those accounts. I jumped in myself.
Sure.
2021, just, COVID was, I guess the vaccines were coming in. So once it became April of 2021, we haven't traveled for a year. So I decided
Right.
I had to go on the road for 6 weeks
Right.
straight, every week.
Yeah.
Phoenix
Right.
one week, Chicago another week, two cities in a week. Just talking to all our clients and making sure they all knew we existed and making
Yeah.
sure that we continued to get business from them. Any issues we were able to address. That was a challenge.
Sure. Sure. Yeah. That's quite a story and quite a comeback. And here you are. You did well. You built the company and you sold the company, and I'm assuming that the company lives on within the new ownership.
Correct.
So, and
Correct.
on that point, is there, you mentioned people, knowing people and things like that. Was there something that you think that you built that you're proud of, that you handed off? Going back to that Khalil Gibran point, the children, there is something that we build and then we kind of let that go. And what was the process like of letting go? And then was there something that you were proud of that you think that you handed off to this new organization that now
I think it's the people that we had,
right,
the fact that we had all these great clients,
right,
had a name in the industry, and more importantly, we had all these people who, um, not everybody stayed with us, right? But there were some
right, sure,
people who spent 7, 8, 10 years. When I sold the company, a month later, one of them went on LinkedIn and said she had spent a decade with us. So many
sure,
of the folks, started out in India, finished
right,
college,
yeah,
and then basically grew with the company, got their visa, they came here, they're in the process of
hmm,
getting green cards, they got
right,
married, bought a house, family. So I feel proudest of that. Like all these people,
yes, yeah,
they grew with the company. Some of them left. So another person, spent 4 years with us and left, but now he's got a fantastic position as a manager at Ernst& Young. Other people have set up their own companies. That's fine,
sure,
right?
sure,
Some was choose to stay with us, some moved on. That's okay.
absolutely.
But at the end of the day, I feel like at some point, if I were to meet them 10 years from now, they're going to say, Sunil, we learned something from
We're
you.
still friends.
I
Yeah,
learned something from them too.
sure,
Hopefully, I help them along in their careers, right?
absolutely. One of my favorite authors is this fellow by the name of Joseph Campbell. You might have heard of him. He's created this sort of like an archetype of a story. We're storytelling, people. We've been telling and hearing stories for thousands of years. And there is a formula for telling a good story. And he talks about it's called the hero's journey. There's a hero who is comfortable, everything is going great, and something goes wrong, and he goes on a sort of a journey. And as he goes on that journey, it's sometimes an external journey, but it's also an internal journey. You kind of find out things about yourself, who you are deep inside. So the internal journey is sort of like a metaphor, or external journey is like a metaphor for the internal journey. And you had quite a journey. You talked about, we talked about that dark night of the soul kind of things. And one thing that happens to the character, that this is fiction, but we're talking real life here, right? What he talks about is that when someone goes on a journey like that, they go deep within themselves and they find out things about themselves that they didn't know. Was there anything that you found out about yourself, Sunil, that you didn't think that you knew about yourself, that you didn't think that you had in you?
Yeah. So my wife, my mother says my father doesn't like to take risks.
Right.
And my wife would tell me I would never like to take risks. Period. End of story. That's
Right.
something I was pleasantly surprised about, which is
Right.
the ability to take risks. And
Yes.
part of it is maybe it's not just risk taking; it's maybe just sheer stupidity and ignorance. You don't
Uh-huh.
understand the risk, so you just take it.
You just
But on
take
the
it,
other,
right?
you just take the risk. But on the other hand, you take a judgment call. So when
Absolutely.
I left a relatively cushy job.
Yeah.
So the risk is okay. So I'm going to give up 1 year's worth of income. That was
Right.
what I was thinking about. If you have
Yeah.
money in the bank, 1 year's worth of income. Now I
Yeah.
didn't think about what happens if after the end of the year I have to look for a job, but it might be another year before I get a job. I didn't think about that. I
Right.
just thought about 1 year, right? So
Right.
that is the risk. Then you can you just put everything in very financial terms and think about downside protection. If you're going to hire somebody, what's the risk you're taking?
Sure.
Right? What's
Sure.
the risk you're taking around financial risk you're taking? What's the risk they're taking
Yeah.
by joining you? Or if you're running an experiment,
Yeah.
what's the risk you're taking around that business experiment? Right?
Sure.
So many people's time, whatever it is. So that's it. I kind of just think about it that way. It's that risk tolerance,
Absolutely. Yeah.
right,
Yeah. Sure.
is a challenge, and people don't appreciate it.
Yeah.
But I
Well,
think the entrepreneurs do things they have no idea. I know
right.
everyone says he's a risk taker. I think
Yes.
sometimes it's just ignorance. You have no idea
Yeah.
what the level of risk is. You have no idea if customers are going to like what you have. You have no
Sure.
idea what the competition is like, right?
Sure.
You just
Yeah.
gotta,
Yeah. And when you're in the moment doing the things that you're doing, you don't perceive it as a risk. Oh my God, I'm taking this risk, and what you're just doing the things that you think that is the right thing to do in the moment,
correct. That's
right?
right.
So, and something else that fascinates me about your story, Sunil, particularly, is that here you are, you're a chartered accountant. You are about numbers, and you're about predictability, and you're about control. And every CA charter or CPA that I talk to, they'll talk about, well, give me your last 10 years of your financials, right? That's where they get their predictability from. That's where they get this idea of stability, right? And here you are. You're not just talking about taking a risk. You've done it, and that's leaving the cushy corporate job and throwing the dice in a way. And I don't think there is any amount of analysis that you can do with or without the AI that will give you a definitive answer. If you had an AI model at the time and you had fed all this data into it and said, "Hey, tell me, should I quit my job or not?" So there is this human factor to living life and being an entrepreneur that that is crucial. That is the basis
I agree.
of
I agree. It's your ability
yeah,
to take a risk and say, also, not don't take ridiculous risks, right? I mean, there's
yeah,
a
right,
not
not
too
crazy,
far risk. Don't.
yeah,
I mean,
right,
I wouldn't mortgage my house. I wouldn't
yeah,
mortgage my house, right? To take risks, right? I wouldn't
yeah,
do it.
right,
Other people would do it.
sure,
I wouldn't do it necessarily.
sure. Some would, yeah,
Some
yeah,
would, but I wouldn't do it. So you have to take
right,
a considered risk. Well,
absolutely,
my wife wasn't working outside the home. Just so you know, my wife
sure,
wasn't working outside the home when I started the information asset. My kids were in school, right?
wow,
And
yeah,
I was not independently wealthy.
sure,
So, so it's not like I had family money, etc. Right? So that
yeah,
wasn't there. But I said, okay, if it's a year and if it doesn't work, I'll go back. I'll
yeah,
learn
yeah,
something along the way.
yeah, yeah,
And the way I
right,
thought about it was, okay, so if it's a complete disaster, I'll
yeah,
still learn something. So when I go and look for a job at the end of a year, I'll probably get a higher salary because I learned some things.
absolutely,
Right?
sure.
So that's the way I thought about it.
I talk to quite a few entrepreneurs, and there are those who are starting out and they get up to a certain level. So there is a number of categories of entrepreneurs. There are those who start out struggling to get attraction. They have probably a product idea, things like that, and they don't have clients, and they struggle there. But then there are those who get beyond that and build a pretty fairly stable company. Let's say they get to about 10 employee, 15, 20 employee, the size basically, and they have revenues, they have profits, they probably have financing, they probably have revenues, and a solid business. Basically they can hire people and pay their salaries, make the payroll. All of these things are happening, and yet there is one thing that they struggle with, which is that, something that you successfully navigated, which is that they themselves are still running the show. If they step away from it for 3 months or 6 months or a year and they come back, the business is gone, right?
Yeah.
And if you were to say one or two things to someone who is running an organization like that, what would that be?
Yeah, so I think you have to look at your outcome. It's as simple as that.
Yeah,
Uh, and there's probably a couple of roles that are absolutely critical. The first
sure,
role is where is the customers coming from?
right,
So where are the new logos coming from?
yeah,
And then who's managing the existing logos, right?
sure,
And then I guess what's happening on a day-to-day basis. Now I was in a services business. I'm
sure,
assuming manufacturing it's different, but
right,
there's typically sales and there's delivery, right? And even manufacture the equivalent of delivery and manufacturing is the production, right?
right, right,
So you've got to think. I think probably the most critical role is where your customers, I believe,
absolutely.
where your
So
customers
you
coming
and
from,
you
managing them, right?
sure, yeah. Sorry, I interrupted you. Can you finish that statement that you
No,
were
no, no.
making?
It's like most critical is where your customers coming from,
Sure,
the repeatable process, right?
absolutely. And you I think you've subcategorized that into two or three things. Where is your customer coming from? And I think you said something about closing that sale, bringing that customer in, and then managing the clients that you have.
So new logos, new
Right.
logos.
New logos. Right.
The second one is growing those existing logos, right?
Growing the existing logos.
And
Absolutely.
the
Right.
third one is sort of day-to-day operations, right? Like so, if it's a manufacturing, who's running the manufacturing operation? Services, who's managing the delivery? If you're running a software shop, who owns the product development? Who's your chief technology officer? The strategy. That's it. right?
Sure.
So at
Yeah.
some point, you've got to think about, do I bring in a professional CEO?
Absolutely.
I'm able to
Crucial.
attract a professional CEO to come in who can see the upside for themselves,
Right. Right.
and being able to recruit that professional CEO to come in, and then be able to step back and let the CEO run the show.
I presume that it takes a level of humility. It takes it's a level of self-awareness. Is that a part of the equation here? Or is that a factor or not? Being
Yeah,
able to look at the
I thought
entrepreneur.
I thought I had like 25 direct reports at one point. I thought,
Right.
how am I managing 25 direct reports? I was too
You
worried
can.
about everyone thinking that
Yeah.
they had to report to me, otherwise their feelings would be hurt. So when I brought my board advisor in, my friend, he told me, no, you can't have this. You need to have a structure. You need to be
Sure.
able to scale the organization. You can't do it
Right.
based on. I remember talking to a CEO of a company. They had probably 500 people, right? And this was several
Sure.
years ago. And he said the way you scale is uh, you hire a management team,
Right.
assuming the business will double,
Uh-huh.
and the business will double because now you've got
Right.
a management team that will help you scale, right?
Yeah. Right.
That's dependent on the type of organization you are. Is it growing? But that's
Yeah.
it, right?
Sure. Got it. Yeah. Right. On a personal level, what do you do for fun?
Me,
Yeah.
my wife and I like to travel.
Oh, excellent. Yeah.
I like to travel, and that's it. I like to
Uh-huh.
travel. I watch the English Premier League,
Uh-huh. Oh,
or
IPL. Yes. You cricket.
EPL, English Premier League, not
Oh,
the.
okay. A final question for you. How do you define success?
So, I mean, success. You could think financial. Have you done an exit? But also, have you, are you happy?
Yeah.
Uh, are you
Right.
happy? For example, that's important.
Yeah.
Are you learning new things? Are you learning new skills?
Right.
And ultimately, are you serving a need that people have? So are people knocking on the door, uh, saying, I want to learn I want something that you have. So you're
Yeah.
serving an unmet need. In my case, in the old days, it was data governance, right?
Sure.
Yeah. And then I wanted to add one more thing, if I
Mm-hmm.
may,
Yeah.
right? Which is never stop learning. And that's probably one of the mistakes I made with my previous company. I probably stopped learning when I was in the middle of data governance. I was just
Sure.
trying to become an expert in data governance, and that's great. But I had blinkers on and I never focused on everything else happening. So
Sure.
I've probably done a better job on cloud,
Right.
uh,
Sure.
you know, Azure and Amazon Web Services, Google Cloud. If I
Sure.
had maybe 10% of my time just learning, probably I had a level of hubris saying, I'm just an expert, I know everything. So now, when I sold, my previous company, I had some time to reflect. And over the past 6 months, I'm basically focusing on what I'm writing a blog that'll be out next week.
Sure.
Sunil's personal AI immersion curriculum.
Okay.
So how am I going to learn artificial intelligence myself? I can't talk about AI economics if I don't understand AI at a level of
Sure.
detail. My curriculum involves I'm going to understand what all the cloud vendors. So I went to the Amazon conference, the Microsoft conference, Snowflake, Databricks Learn. Then
Sure.
being hands-on with the technologies, being hands-on and getting certified with Microsoft Azure AI, FinOps, AWS, Cohere, OpenAI, learning public policy, which means reading the regulations from the European Union, the White House executive order,
Sure.
uh, talking to people. So this is my personal curriculum. I don't think with business commitments, work commitments, I'm going to have the time to go take a formal course. But
Right.
I'm building my own curriculum, and I feel like I have this opportunity to get immersed in AI, build my own curriculum, and then we'll see what happens.
That's awesome. If someone wants to get in touch with you, Sunil, they want to connect with you, get to know you a little bit better, get to know your business a little bit better, how do they do that?
Just find me on LinkedIn.
Okay.
Sunil Soares, that's the easiest way to do it.
Okay.
Just ping me on LinkedIn, DM me, and I'll be happy to connect.
All right. Awesome. And I'll put that in the show notes when we publish the episode. Okay.
Okay.
This has been a blast, Sunil, and I learned so much from you. And I really thank you for being on the podcast, being on this episode, and sharing your story.
Excellent. Thank you, Bhavesh.